Hello, everyone. This is Stephen Richardson, and today we're going to be talking about the semiconductor materials and equipment industry and the stock ASML. Um, I did this analysis on February 3rd, 2024, and it's one of three that I'm doing for this industry. And then I'll be doing the semiconductor industry. There's about four stocks, I think, I'll be looking at in order to find the best one, what I think the best one for the best value. Um, and I'm showing two other channels that I also um, have material on: Backyard Musings, which is current events with edgy commentary, and Law School Dash Essentials, which has outlines for um, Cal bar exam questions, and they're relevant for any bar exam or any classes that a law student is taking. So let's get started. The next slide is disclaimer. This is not financial advice that I'm talking about today. This is education. Okay, so first thing we have to do is project ASML's sales, what kind of growth we think we're going to see. So you visit these websites, Better Investing, Zacks, Yahoo Value Line, to start gathering the data on the left. This is from my spreadsheet that I snipped, and then you make your judgment. Remember that more recent data is more relevant data. That this is for a 5-year projection. We're projecting out. So from the SSG, I found the 10-year growth, the 5-year growth, the recent quarter growth, and the trailing 12-month growth. And then I went to Yahoo to get their analyst estimate. There were 19 analysts looking at the sales revenue. And then I went to Zach. There were 3 analysts looking at it, and then Value Line. And then the 2-year ACE that's in Better Investing. So I made a judgment of 20%. It seems like it's aggressive. I admit it seems like it's aggressive. So I've also snipped pictures of where you can find the trailing 4 quarters is on the quarterly information tab in SSG. Then I snipped the recent quarter figures, analyst recommendations, their estimates. Um, that's where the 2-year ACE comes from. And then I plugged in 20% for sales, and I've snipped what 20% of sales is going to look like. And it almost continues in a straight line with what it's been doing. Uh, okay, let's go to the next slide. So now the ASML earnings per share projection, just like sales. Um, this is my spreadsheet snip. And then I went to Better Investing Market Watch, NASDAQ, Seeking Alpha, Yahoo, and Zacks to get this information. The ones that are in green are calculations that you have to make based on their earnings, previous earnings, and projected earnings per share per quarter. The yellow ones are just things that you type in from wherever you find them. And then my judgment was again, you can see the SNP, the EPS, the trailing 4 quarters. You go to the quarterly tab in SSG, and I figured 30% for, which is again is aggressive. This is, I think you'll see why I was so aggressive. That's my judgment for this. Your judgment could be different. It could be more conservative. All right. So now we do a projection recap here. Um, they appear really aggressive. They do. Analyst estimates are more aggressive. Large companies expected to grow 5 to 7% per annum, and this one over 10 years, 17.8%. It's growing faster than the rule of thumb that you're looking at. And I was digging in to ASML. It says a new foundry is coming online in 2025. That should really increase the earnings per share and the sales. That's part of my why I did this aggressively. Really strong pre-tax profit. I mean, really strong. Uh, ROE is crazy. That appears to be trending downward. We need to just keep a watch of that. And it looks like I'm guessing ASML will need to build a new foundry probably in 2029 based on Moore's second law, which says um, you need to build a foundry every 4 years, and they'll get more expensive each time. All right, so we put in our projections, 20 and 30, and then this is what it projected. This is what it projected the sales to come out to be, and the earnings per share for an annual earnings per share. at the 5-year mark. Okay. All right. So now we go on to the price earnings. We have to project what we think the price earnings. So at a glance, you can see this is the data for the price earnings, and you can see they have a dividend too, which is nice. Their dividend is very generous too. So the high and the low, I don't see any outliers. I don't see anything weird or strange. So I'm not crossing any of the outliers out. Very high current price earnings ratio, pretty high average 5-year average earnings ratio. Um, Look at that earnings trailing 12 months is $21.52. That's that's wow. That's crazy. Um, so when you take a look at the high price in 2019 as compared to the 2023, it's staggering. I think it's multiplied by three, and it's really good dividend. Okay, this is at a glance. Now we go into projections. This is my PE projection slide, and I did a snip of their stock price for the last 5 years. You can see 5 years ago it was lower, and then it started to climb up and peaked in middle 2021. That's when the COVID pretty much hit, and then it rocketed down, then went back up, started climbing back up. So I put down this information, the 10-year EPS it pulls from the previous worksheet, and then the current PE, the average 5-year average PE, high PE, low PE for 5 years. Then I pulled out the sector, which is technology, has a lot of companies there. And then I pulled out the industry, 30 companies in the industry, 26.7. So their PE is higher by a large margin than the average industry average. So I've got S&P historic S&P price earnings ratios, the PEG 1.4. So it's undervalued if it's less than one. So this is overvalued. And then the value line trailing price earnings ratio for 12 months has 34. So now, and you can see the websites where I got this information. So now it's time to make a projection on the high and low. Okay, so for the high, I snipped when you click on the high, this window opens up and it conveniently tells you the 5-year average high, the 5-year PE, and the current PE. And remember, I collected a lot more data. Sector PE is 29.6, industry PE is 26.7. ASML seemed to weather the storm in 2023 than its competitors, weathered it better. Its competitors didn't do so well. That would be worth noting why. It's typically had a higher PE than its competitors. You can see I snipped that there. Um, I was very conservative with the high PE judgment. Not sure how long they can sustain a PE in the 40s. Okay, so I decided 40 on the high, and I think that's conservative. A 40 on the high PE, which would give us a forecast of 3,196. And I was looking at the what is it called? The sentiment in SSG, and it was saying the high price was half of this. So I was aggressive on that, the 30%, the 20% for sales and revenue. That's how this is calculated. Okay, going to the next slide. Sector PE again 29.6, industry 26.7. As expected, ASML's low PE is higher than its competitors because it has a higher PE. I was quite conservative on the low P projection, and so I said 25 for the low, and um, which calculated out to a $538 share price. So again, filling in these 40 and the 20 and the 20 into our spreadsheet, this showed that using an aggressive 33, 33, 33, you'll see in the next slide why it's aggressive. A conservative would be 20, 50, 20 on what the buy, hold, and sell zones. Um, it's not split since 2007, where it did an 8-for-9 reverse split. Stock has grown 36-fold since the 2008-2009 crisis. Can ASML go as high as 1,300 per share? Could it? Maybe. Well, we're going to see in the next 5 years. So here's the snip here that shows these averages for the buy, hold, and sell zone. It's in the middle of the buy. and it's overvalued. The fair value price is 750, so it's overvalued. And then the 5-year potential is showing the upside downside ratio is 6.5 to 1, which is in the buy zone. Um, CFRA Global Net Advantage rates this as a 5-star strong buy, but is it the best value? It's overpriced. The premium is an 18% premium. It may need to go on a watch list because we want the best value, the best stock with the best value. This is a very attractive stock and well run. So I'm going to put this on the watch list. And I do a dividend sheet here too, to show the dividends are great. Um, Payouts are averaging 35.9%. Debt also has a downward trend. We saw that. We saw the ROE crazy. It has a stock buyback program in place through 2025, 12 billion euros for this whole buyout thing, for a total of 2 million shares. Again, it's a very well run company. All right. If you liked what you saw, click subscribe. We're going to be looking at other stocks in the semiconductor materials and equipment industry. And click subscribe. Tell your friends, tell your family, tell your enemies. And remember my other channels, Backyard Musings, where it's current events and edgy commentary, and Law School Dash Essentials for those law students. Thanks and have a great day.